Hey there, happy Friday everybody. Today is April 9th, and today's chart of the day, you might have already seen it in the news, but it's certainly getting a lot of talk, and I think it's worth sharing with everybody today. This is the index, this is called the PPI, Producers Price Index, and it's important. It's also a measure just like CPI to kind of keep an idea of what's going on with inflation. What's interesting to note is that the consensus for this index today was that it was going to rise by about 0.5%, and what we saw it rise today was a full 1%. So that's double what was predicted there. More importantly, this is the biggest gain, a 4.2% gain since the same time last year. This is the biggest year-over-year gain since 2011. So this continues with the inflation narrative that prices are going up. If you look at prices of commodities, as we pointed out many times, you can see that that's taking place. A couple other charts that I wanted to share with you guys today that I thought were worthwhile is, first of all, returning to the chart that we had earlier. And what I was suggesting on Monday was that gold was very close to this breakout. You can see this blue line similar to what I created earlier. And you can see that gold's just now bouncing above that line, something to keep an eye on. But also when we look at the volume and distribution of trading around this same price point, we see that there's a lot of overhead here. And as gold starts to clear this price, there's really nothing in the way keeping it from jumping up $100. Not investment advice here, but a lot of people ask us what our view is, having been in markets and been traders for many years, and this is one of the things that we find compelling. When a price is knocking on a price ceiling and there's really no overhang, once you get a few points up from there, it does get interesting. In addition to that, one other chart, speaking of gold, that I think is absolutely worth noting is that the volatility, 1 month volatility on gold, looking at options prices, is very cheap. In fact, it's 12.4 right now, and for perspective, that's even below the S&P 500 1 month volatility, which is at 13.18. It's very rare to see commodities with volatilities lower than key benchmark indexes in equities because commodities can move around a lot more. And so if you can buy call options as an example on gold right now where the volatility is low, this does create a really interesting risk-reward proposition. So this is today's update on gold, a little bit more deep dive on how markets work and how trading works, and hope you guys find this a bit useful to you. Let us know in the comment section below. Thanks and have a great weekend.